I'm actually afraid. I'm afraid for the first time. And that's a big statement, but I'm afraid for the first time. I have been talking about the then they fight you phase, again, for over a year. And I've been talking about us versus them and us on the crypto side and the digital side and the Bitcoin side. But here's the thing. Operation Choke Point, people think, oh, they did that. Oh, no. I understand it from talking to some kind of people on the ground at different projects. There's some bad stuff coming.
BlackRock, one of Wall Street's major asset management firms, joined the lengthy list of businesses attempting to introduce investors to the cryptocurrency market on Thursday. When the Wall Street behemoth submitted an application to the U.S. Securities and Exchange Commission for a Bitcoin exchange-traded fund, or ETF, the SEC received a variety of responses from the cryptocurrency community. The Wall Street behemoth controls assets worth close to $10 trillion. BlackRock's application, and eventual approval given the firm's high ETF approval rate, is seen by some in the cryptocurrency world as beneficial to the price of crypto assets, while others are critical of the action. The corporate ethics of BlackRock, in the opinion of those in this group, are in direct opposition to everything the Bitcoin sector stands for. The proposed product is technically a trust, as others have already noted, but experts claim that, based on the filing, it functions exactly like any other genuine ETF. BlackRock is requesting permission to introduce the shares Bitcoin Trust, which it claims will make it simple for investors to have exposure to cryptocurrencies through a product provided by the biggest asset manager in the world. The shares are designed to be a straightforward alternative to buying, holding, and trading Bitcoin directly on a peer-to-peer or other basis via a digital asset exchange. They are part of the filing grids and are meant to be an easy way to make an investment similar to one in Bitcoin. The SEC has yet to approve a Bitcoin ETF despite numerous investing firms' requests over the previous 10 years, frequently citing worries about market manipulation. Grayscale Investments sued the SEC last year after the regulator rejected its request to convert its Grayscale Bitcoin Trust, GBTC, to an ETF. Other asset management companies, such as Cathie Wood's ARK Invest, also had their applications for spot Bitcoin ETFs rejected by the regulator almost immediately. However, analysts claim that this might not be the case for BlackRock, the largest investment manager who has also worked with Bank of New York Mellon, another prominent financial institution, which the application indicates would be the custodian for the trust cash holdings. BlackRock is also the largest investment manager and has also partnered with Bank of New York Mellon. Despite the SEC lawsuit against the American-based exchange, BlackRock will continue to serve as Coinbase's custodian. During the most recent installment of his weekly roundup with Blockworks macro-famous hedge fund manager and crypto enthusiast Mark Yusko addresses what the spot Bitcoin applications could entail for the entire crypto sector, especially considering the firm applying for it. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future videos like this as we continue to bring you excerpts from the debate.
We said it on this show over a year ago, saying no one else will get approved except BlackRock. Yep. The only person who will ever get a spot ETF is BlackRock. And there's a reason, because they're inside the tent and we're outside the tent and anyone competing. But here's the thing. Operation Choke Point, people think, oh, they did that. Oh, no. I understand it from talking to some kind of people on the ground at different projects. There's some bad stuff coming. Actually, what I'm really afraid about is if the SEC does what it appears they're going to do in terms of declaring all of it, except Bitcoin, a security, and anyone who's transacted in any of this stuff is kind of a criminal. That's going to be bad. But where does it stop? Are my Pokemon cards securities now? Is my Magic the Gathering game a Pokemon? I mean, is that a security now? Again, it's not in my best interest to criticize the people who regulate me. I know that. So don't come for me. I'm actually, I'm starting to really appreciate what I've been talking about, which is they, and we know who they are, right? It's JP Morgan, BlackRock, and all of the controllers of the money and power felt threatened, as they should have, by a disruptive innovation that will, I'm not going to back down from will replace them. Right? The infrastructure of trust will be replaced by the infrastructure of truth. It just will. But man, the war is going to be bloody. The implied ridiculousness of, I had a guy respond to me, this is negative. Or no, this is a bad thing. I'm like, no, it's not.
Yeah.
But what they're implying is that money isn't pure. I mean, it's literally like mudbloods and purebloods from Harry Potter. That money's not pure. We don't want that money converting into Bitcoin. Of course you do. You want any and all fiat of any kind and any variety to convert to Bitcoin, because the bigger the network, the bigger the safety, security, the more adoption, the more that's the only way the value of a network goes up, is there more participants. And so to say that, well, they're the enemy. Well, they might be, right? BlackRock and JP Morgan, I shouldn't accuse people directly, but it's hypothetically possible that since November of last year, when the futures-based ETF was issued, it's entirely possible that those large institutions have been shorting the shit out of Bitcoin. It's entirely possible. In fact, it's highly likely, because we have proof in the gold market that they do. And every year they make billions of dollars shorting the future and going long the physical. And it's unbelievable to me that that's okay, right? That JP can pay $1 billion fine, $1 billion, but say, oh yeah, we made 20 billion, so that's 5%. Who cares?
Cost of doing business.
And it's cost of doing business. It's clear that happened for a portion of this downturn, because it's to the day that it started. Now, yes, it was exacerbated by, Sam, and it was exacerbated by, bad people doing bad things, but it just is. First, we had the dovish hike. I'm like, what the hell is a dovish hike? I mean, the creativity to wordsmith all these words. And look, I don't envy their job. In the digital age, in the social media age, every single word, every action, every body movement, everything, every piece of luggage you carry is interpreted. And so now they've come up with this idea of a hawkish pause. What does that mean? Well, in December last year, everybody said, oh, they're gonna pivot. And the stock market surged, and everybody's like, oh, this is great. And now we've had this, not incredible, it's crazy. I mean, maniacal, it's true mania, run in some of the tech stocks, particularly around AI, just on nothing. On literally nothing. And in terms of the results of the companies, the tech is great.
Yep.
But Microsoft invests something that's worth 10 billion and their market cap goes up 200 billion. Or Google promises $1 billion order to NVIDIA and their market cap goes up 200 billion. Or this company C3 AI. And look, I've been wrong in the sense that the stock literally should be zero. The stock should be zero. Whatever they earn in revenue, they lose. Like they make 60 million in revenue every quarter, they lose 60 million every quarter. They eviscerate cash. There is no business there. And this stock is up like 400% this year because its ticker is AI. everyone thinks it's OpenAI. And that's just stupid. So the markets lost their mind because of this belief that somehow the Fed's gonna, as you said, inject liquidity, but they're not. I mean, save the $300 billion that they did in an emergency around SVB, okay, which reversed a whole bunch of the QT from last year. They're definitely not loosening. They have not, they stopped hiking, maybe. They said maybe there could be a couple more. But they have not reversed, and they have not started injecting liquidity, and they have not stopped shrinking their balance sheet. So it just doesn't make any sense. And if you use the discount rate, the average discount rate of 5.25 today, the valuations are just stupid, right? We've had the S&P multiple expand in a world where interest rates went from 1 to 5. It's completely illogical. If you can do math, right? Which math is hard. That is one of my hashtags. It just wouldn't happen because earnings have gone down, not up. So everything's wrong with that picture. Now, China, on the other hand, quietly, money printer go burr. They're quietly printing money, lowering interest rates. Their currency's off 5%. That's a big deal. Stock market had surged from October, then fell, gave it all back. But now in the last 2 weeks, suddenly is up again because people are like, oh, wait a second. They really are printing money. Their GDP really is going to be back to 6%. They really are focused on growth. Now, my favorite, Michael, is they've got a new bill, broad-based, they call it a white paper actually, which I think is kind of funny, on crypto, that may reverse the ban. Shocking. No, not shocking. Like I said, China, I've been talking about this for years, China's playing Go. They're playing a different game. The rest of the world is arguing how to set up the checkerboard. They're playing a different game. From the lockdowns, which they fomented around the world. Well, why did they do that? Why did they destroy their own economy for 2 years? To gain market share, to gain a pause, back to the hawkish pause. They gained a pause in activity, pollution, all kinds of things. They had a big reset, and now they're stepping on the gas and sprinting away. They're first to CBDC. They're going to be first to a broad-based digital asset system. I mean, they're kicking our ass. It's fun.
What do you think of Yusuker's analysis of the U.S. economy and his thoughts on BlackRock's ETF application? Please share your thoughts and views in the space provided below. Additionally, if you enjoyed this video, please switch on post notifications and subscribe to the channel to see more of them. Thank you for watching.